I wanted to get into this next kind of topic around the death spiral, this profitability death spiral. And we talked about, a little bit of what leads to this wide distribution, that price transparency, people with smartphones, they can now see everything, that creating that price erosion that we talked about, but then, price erosion across all of those channels. So I wanted to kind of walk into this a little bit, maybe walk through the exercise and then actually go to the death spiral illustration and have you guys comment on a couple of different sides, because I think people would be interested to get your thoughts. And again, for everyone listening, if you have questions, feel free to use the Q&A or the chat feature to weigh in, and we'll get to those. But, again, high level, a few years ago, I think this is mostly what a traditional retailer may have looked like, depending on, the industry. You mentioned pet, you mentioned, sports and outdoor. So obviously you can't represent all different industries here, but at a high level, you have a strong brick and mortar national retailer kind of presence. Amazon wasn't that big for most brands, unless they were born online. It was just kind of a, we routinely run a brand still that Amazon's only 8, 10, 12% of their business. And so this was kind of, again, traditional look. You had a just distribution, healthy distribution business. Then what happened over time is really Amazon started to grow and represent a much larger share of the brand's business. And because the marketplace side has continually grown for sure on Amazon's business as well, many brands experience distribution growth as well, because you had this race of third-party sellers, whether they were authorized or unauthorized, hitting your distributors and saying, hey, I want some of this product. I want to be able to get a hold of it. And so you actually saw distribution sales grow up as well. You didn't never necessarily always know how they were getting, liquidating that product, if it was legit, if they were selling on their own website, they were selling on specialty, online retail or whatever, or if it's actually getting, kicked off on Amazon. But then you started to see a little bit more of that, lowering of prices. So maybe, at a high level, you saw for a long time profit and revenue kind of growing together. But then, and maybe hasn't been this dramatic, you saw revenue increasing as e-commerce grew. And this is kind of what I was saying earlier, like many brands say, Amazon's my fastest growing channel. And my question is always, cool, that's good news. Is your profit margin keeping pace with the growth of the revenue, or is it starting to flag? And I don't mean just your profit margin on Amazon. I mean across all these different channels, because now you might be being hit with those concessions or buybacks or, all that channel conflict that we talked about. And that really is all happening here that's causing this profitability to suffer. And so again, I would just say, many sales leaders, it's almost like they see it happening, but they don't know all the factors. They don't know the levers. Many of the people, the CFO sees it, right? The people in finance see it, but they don't know who's the culprit. They just see it kind of happening. So again, maybe I'll get into this, death spiral graphic here real quick. So high level, we kind of been through this, but I want to just walk you guys through and then ask you some questions, which is, okay, e-commerce booms. Bunch of third-party sellers flock to marketplaces. Your distribution sales go up. Your Amazon sales go up. Or in this case, could be, Walmart's marketplace, could be eBay, whatever, but we'll just use Amazon US as the example. Then this kind of like flocking of marketplace sellers or unauthorized sellers creates competition where they're wanting to lower the price to win the buy box. Then you lose the buy box. You get in this buy box kind of like tailspin. And this happens on 1P, 3P, whatever the model, just because of this kind of marketplace side of the business. Then your brick and mortar kind of start to match the prices. Then your retail profits erode because you're getting hit with all those, concessions and the buybacks and the price match guarantees and all that other stuff. Then your e-commerce profits erode because honestly, this we see a lot of brands come to us like, how do I deal with the crap out issue? Because now Amazon's coming back and asking for prices that really aren't even profitable anymore. And do I just use Amazon as a marketing channel now? Like they're in a world of hurt. And so ultimately all channels are less profitable than when you started. So we'll get into, kind of the flywheel of getting back to profitability, but I wanted to take a second and just walk through with you guys, Jared and Steve, where you kind of see the friction points either in your own organization or in previous organizations or with brands that you work with, et cetera. So Jared, maybe I could start with you. What areas do you see, some of this profitability death spiral coming into play?
Well, I just want to Yeah, for sure. I wanted to kind of comment. You meant like, hey, if I'm getting wholesale pricing, what does it matter? And if you haven't seen the ramifications that come from that, if you don't know what the ramifications are, you will eventually find out, because they do come. And you highlighted all the things that it come from. They could come back and ask for, additional funding to make their margin whole. They can kick you off their shelf. There's a lot of ramifications, and I've talked about at Outlet, we try to cut this off at the head, right? We don't work with distributors. We really limit our who we partner with so that everybody has merits. We look for people that can survive on their own merits and not price alone. But we still see issues, and we were involved with, there was a theft ring that was part of it. So it takes one or two units to drop the price, and then all of a sudden another retailer matches that, and then another retailer matches that, and Amazon's matching that, and you're trying your hardest to get everybody to come back to the right price, and maybe you've gotten rid of that rogue seller that had the bad units, but everybody's pointing at each other and saying, you go first and you go first. And so in addition to the death spiral, it also creates issues with the retailers. Nobody wants to have conversations about pricing with retailers, and the retailers don't want to have them with us. And so there are serious ramifications by going down this, and it's a constant battle. It's a daily fight, because even if you have try to head as much of this off at the beginning, you're still going to run into these issues. So that's my comment. I don't know if that was what you're looking for, John, but
yeah, I think it totally makes sense. And I'm actually going to get to that point of distribution, because, you made an interesting comment, and there's also a comment that came through that I wanted to read as well, because it's all tied into this notion. But I think they're important, right? When we get to this in a second of how to kind of solve this or reverse the death spiral and get into the profitability flywheel, I think it's really important to make sure we're clear that, it's important to have pricing policies and pricing integrity. But if you have a bunch of partners that could care less, or they couldn't care less about any of your pricing policies, then it's like, who cares? So it really is, you got to have a pricing policy that protects the integrity of your price, but you also have to be super, and I think you said this earlier, choosy around the people you choose to kind of entrust your brand with across these channels, because otherwise you just have blatant disregard for any of those policies, and there's too much pressure. The incentives are too great, whether it's third-party sellers getting a hold of your product through distribution, through gray market, through diverted, through stealing, theft rings. I mean, we see all of that here. The incentives are too high because there's money to be made in not respecting the pricing, basically, and getting a hold of your product in an illegitimate way. So, Steve, maybe you can also weigh in here on any of these kind of pieces of the death spiral that I walked through, and where you're seeing it impact brands kind of most urgently or negatively.
Yeah, I mean, I've spoken to hundreds of brands that are kind of in this death spiral, and what's fascinating to me is how quickly this whole thing can fall apart. And as soon as you start selling to Amazon, especially in the 1P space, and just to put it out there, if you're running a $10 million, $15, $20 million business with Amazon, or even a smaller one, 1P, it's really difficult to walk away from that, especially if it's growing, 30, 40, 50% year over year. Like you kind of think, why do I even want to mess with this? I have this number, I've got to go hit it, and I'm not going to go touch this. And so the timing by which this whole thing can happen is always really fascinating to me. A lot of times brands finally raise their hand when they're down at the very bottom of it, and their brick and mortar customers are frustrated. Amazon's coming back asking for additional discounts, and they don't know how to go and solve it. And the good news is it is absolutely solvable, but maybe the recommendation is to get ahead of this. If you're somewhere in kind of this process right now, dig into it and look for expertise that can help you figure. And I know we're going to talk about this later on kind of what to do, but this can blow your business up really quickly in a really bad way. Because I mean, Amazon and e-commerce, some e-commerce marketplaces, it's like they're assassins, and they don't care about your brand, but your brick and mortar customers do. So if you can find a way to fix what's causing the problem, then your brick and mortar channels, and even some of the other marketplaces like Chewy and iHerb, I mean, they want to compete like gentlemen. They want to fight a fair fight. Amazon doesn't. And so that's where you have to focus your energy, is to figure out, how can I create a level playing field so that ultimately the consumer is the one that makes the decision. If the consumer wants to buy online, then they're going to pay $19.99. If they want to walk into a store, they're going to pay $19.99. If they go to Amazon, it's $19.99. That's competing on a level playing field. Anything other than that is going to continue down this death spiral.
Yeah, I love some of those comments you made, Steve. And I really do have to, take my hat off to some of the brands that we work with. The courage, honestly, like the easiest thing in a way for a sales leader to do is put your head down, hit your number, just go do it. But I'm so impressed with so many of the sales leaders that are forward thinking, and they're just saying, we got to get ahead of this. I'm almost willing to take a hit in my number this year to fix this problem. And I kind of just need to start over. We'd rather just take the hit, get the pain, cut it, and just have it go. And so I'm constantly impressed with the courage. It doesn't always have to happen that way, but at some level, there is going to be pain to try to kind of reverse this.